This is Commodity Wrap. I'm Tony St. James. Well, Wednesday markets ending mostly higher. The corn market, higher. Yeah, I was a little surprised, especially after what we saw on Tuesday on the heels of that crop production report and then the World Ag Supply Demand Estimate, or WASDE report. Soybeans adding to their gains from Tuesday. Meal higher, oil higher. Wheat market in mixed territory and the cotton market in lower territory. And the rest of the row crops, canola higher, rice and oats lower. But really the focus is on the big ones here, corn and soybeans. Brian Hoops is president of Midwest Market Solutions, and I guess stepping back for just a moment, looking at these production numbers from USDA, is it important that we start the conversation by saying these are estimates at a point in time by USDA, not necessarily a projection of exactly where we will end up? Is that a safe assumption?
I think that's a good way to say it. Yeah, I think everybody kind of gets lost in that fact that this is not the final numbers. It's not really where the USDA predicts it will be, but it's as of right now, this is what they think the crop size will be. And so it is hard to make that distinction. And when we're asked to give estimates of what we think the report is going to say, it's not necessarily where we think the final yield numbers will be or what we think the market is trading. It's actually what the USDA is going to say on any given report. And so that's very hard to know because the government will throw you a lot of curveballs and a lot of surprises. And they certainly did that in yesterday's reports, not only record corn and soybean yields, but a huge jump in planted acres for corn to the all-time largest we've ever had. While soybean acres were down even probably more than what we expected, increased exports for corn to the point where a new record for corn exports will be set if these numbers are realized. So there's a lot of moving pieces as always, but a lot of record type movements in that report yesterday.
You know, this may be a bad analogy, but it's almost the best I can come up with at this point. Bowling. When you step up to roll the ball down the first time, you're playing with a 300 game, a perfect game. And if you hit the strike, you're still playing for 300. But anything less than 10 pins on the first ball, and it's coming down. So is that another way to look at it? Maybe USDA is setting that high water mark for us, and now as we go frame by frame by frame, month after month, we'll finally end up where that final score is?
I think it's a pretty fair analogy because this is the way a lot of producers are looking at this year's corn crop. You know, we talked with a number of guys today that were looking at this rally in soybeans, wanting to make cash sales for fall delivery. Some areas are going to get close to $10 cash beans, depending on your basis. But they kind of know where their yields are going to come in at. They're a little more comfortable making some sales now that they've had this nice 60-cent rally in 3 days. So they're going ahead and making cash soybean sales, freeing up a lot of bin space at harvest so they can put that corn crop under storage. With the mentality, as you were alluding to with bowling, the mentality is this is a huge yield number from the USDA, 7.9 million bushels, larger than last month, all-time record by over 8 million bushels, or 8 bushels per acre, I should say, I'm sorry. That type of yield, maybe we don't see that by the time we get into the fall months, we start harvesting, or we get to the final numbers. That's kind of what happened last year in the August report. The USDA gave us a big acreage number, big yield number, and then they started to take that away. And I think the producer wants to put corn on storage, and just in case the same thing happens again this year. Maybe these yields aren't as optimistic or aren't as good as what the USDA is forecasting, and they start to come down. There's a lot of room for them to back off these yield projections, 188.8 national average. It's an outstanding number, and they could certainly back it off 2 or 3 bushels per acre. And I don't think there'd be too many people arguing with those numbers if they did, in fact. So that's, I think, how the farmer mentality is right now. Sell the cash beans while you can, while you have this rally. Put the corn under storage, because there's better likelihood than not that these yields will not be seen in September, October reports, and they will start to come down.
So I guess this also begs the question, and you alluded to it, the export side. Do we have the demand for corn at this point? And maybe we don't have quite the demand yet for this size of a crop, but has demand overall, both domestic and export, been good?
It's been very good. USDA did forecast a new record for corn exports, about 2.87 billion bushels. That beat any other year previously. We are off to a very good start this year. We ended up the 24 marketing season one. We're just wrapping up the old crop year, is commonly referred to, a very strong export pace, and we are actually double last year's pace at this time right now for our new crop sales. Of course, we'll have new numbers in the morning, but we should remain on that pace to see at least double. We've had a strong round of private sale last week that will be reflected tomorrow. We had another private export sale, pretty big one, to Mexico this week. That will be reflected in 2 weeks. Those numbers are going to keep our new crop export pace very high, and we have a high bar to set, but so far we're off to a very good start. If we do happen to see a little bit lower prices as we go into harvest, that should increase our value of our corn and increase those export opportunities once again.
All right. Hey, Brian, hang on just a moment. We'll take a break. We'll come back and pick up more markets. This is Commodity Wrap. This is Commodity Wrap. I'm Tony St. James. On a Wednesday, Brian Hoops is our guest. Brian is president, Midwest Market Solutions. Spent some time talking about that production report and WASDE report from USDA, which came out on Tuesday, and again, was a market mover. And then you look over in the livestock markets on Tuesday, and wait, what in the world happening over there? We saw a big rally going on, tied back over to boxed beef and some additional strength there. The trade on Wednesday was kind of strange. We were higher, we were lower, higher, kind of even, and finished the day with higher live and feeder cattle, hogs in the red. What's happening right now? What do you think's happening in this cattle market?
Well, we can look at open interest as a sign of what's happening in the market. Generally, when you see prices moving higher like this, if you see open interest increasing, it's a sign of new buying coming into the market. That's a pretty healthy indication. What we're actually seeing last week and saw again here in the last couple of days is open interest declining, especially in feeder cattle. And when you have higher prices like that, that usually is a sign that there's shorts getting out of the market or positions being decreased. So there could be some profit taking from long positions. It could be some shorts getting out of the market. And that's kind of what everybody is thinking, is that it's shorts covering those short positions, and meaning, yes, we get some strength from their buying, but once that's gone, there's not as many buyers left. And so it's a little troublesome. That's kind of one of these warning flags we've been trying to talk about here, is that things look good from a box beef standpoint. Packer margins are improving tremendously. Cutout values are higher. But there is some things that underneath the surface here are a little bit concerning. The box beef is moving higher. They're higher again at midday here. That's probably a strong indication that we're seeing a lot of movement prior to the Labor Day holiday, which is generally considered the last big summer holiday of the season, last big grilling holiday. And once that demand starts to soften, then we might just start to see this demand fall off even further after Labor Day. But so far, we've seen strong signs of demand for the summer continuing to be very friendly for this market. We haven't seen the cash trade yet, but it sure looks like we're going to be higher priced, at least steady to higher this week in the cash markets and live cattle. Feeder cattle, a lot of the sale barns are in Yankton, in Oklahoma City, all these sale barns, very strong, especially for those heavier weight calves. And then of course, we start talking about cattle and feed report this month. And on some of the estimates I'm putting together, it looks to be very bullish as placements may come in 10% less than a year ago.
You know, tying into this kind of finally here, Amazon launching same-day delivery of meat, eggs, and produce in more than 1,000 cities today. I just went out online just to see what they had in the meat section. 80-20 ground, $4.89 a pound. You bump that up to 90% lean. That's $7.99 a pound. Again, because you're having to import that to get that more lean content in there. Boneless ribeye, $16.49 a pound. So I guess the question here is, final thoughts on demand for ground beef. I mean, we talk about a lot of times trading down to ground, but if we're talking 16 bucks down to 8, I might stick with the boneless. Thoughts?
Yeah. I think there's kind of a lot of that idea right now. A lot of people have turned to alternative meat sources, turkeys and chicken, a lot of pork as well. They are cheaper in price. Certainly, I love to eat beef and steaks, and a lot of people do. And if you can afford to do that, I don't think you're really cutting it out of your diet. You may not have it 2 times a week. Maybe you only have it once or something like that. But it's still going to be in your diet, and that may be all we need is to keep this demand at a pace level that matches our very tight supplies. When you have very tight supplies, maybe you don't need people eating beef or steak every day. They can make it a part of their diet, but not the entire diet. So I think we found a few substitutes, and certainly a lot of people maybe in that classification where they are not or have gone away from beef entirely because of price. But I think there's a lot of consumers that are still looking at the steaks and pricing them and just making their lifestyle fit their budget.
Brian, if we want to visit some more, where do we find you?
Well, you can reach me at directly 417-501-5132, and you can also find a list of our offices where we have other brokers waiting for you at MidwestMarketSolutions.com.
Brian Hoopes, President, Midwest Market Solutions on Commodity Wrap.